Welcome to another episode of China Update, where I provide you guys with the most up-to-date political, economic and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Happy Wednesday, everybody. This week, the US-based Center for Strategic and International Studies published one of the best reports I have seen on the current state of China's industrial policy. The report, combining estimates from multiple tools, among them direct subsidies, tax breaks, below-market credit and state investment funds, comes to very conservative numbers which find that China's backing of its own companies' industrial policy amounted to at least 1.73% of its gross domestic product in 2019. Indeed, China's spending, both as a share of GDP and in absolute dollar terms, is significantly higher than that of 7 other economies analyzed in the report, including South Korea, France, Germany, Japan, Taiwan, the US, and Brazil. The report makes 3 core findings, and now quoting the report: 1. Even using a conservative methodology, China's industrial policy spending is enormous. Like we said before, at least 1.73% of GDP in 2019. This is equivalent to more than $248 billion at nominal exchange rates and $407 billion at PPP or purchasing power parity exchange rates. This is higher than China's defense spending in 2019 if we use the numbers from the Stockholm International Peace Research Institute, which estimates defense spending in the country at $240 billion in nominal exchange rate terms, though many have argued that real spending on the military in China could be much higher. Alternative data and assumptions, including for China's below-market credit, subsidies to non-listed private firms, government guidance funds and state-owned enterprise net payables, would result in much larger aggregate estimates. 2. Even with such a low-end estimate, China is an outlier. It spends far more on supporting its industries than any other economy in this study. As a share of GDP, China spends over twice as much as South Korea, for example, which is the second largest relative spender in the sample. In dollar terms, China spends more than twice as much as the United States. From a historical perspective, China's approach to industrial policy is exceptional, as Beijing is sustaining or increasing vertical industrial policy at a level of development when other economies have dialed back. The report observes 3 industry case studies: aluminium, semiconductors and electric vehicles, show how China stands out in terms of both quantifiable spending as well as non-quantifiable policy tools. Next up on the economy, yesterday, Monday, the People's Bank of China, China's central bank, joined the State Council in rolling out measures for a very sick economy. The People's Bank of China and the China Banking and Insurance Regulatory Commission summoned 24 major banks on Monday and told them to increase lending to small businesses, green projects, technology, renovation, energy supply, and infrastructure. During the meeting, the regulators admitted, quote, "Downward pressure on the economy continues to increase due to the unexpected factors at home and abroad." End quote. China's loan growth weakened sharply in April to the lowest level in almost 5 years, with mortgage loans contracting again. The regulators told lenders to accelerate the delivery of approved loans, maintain stable growth of property loans, and support deferred repayments by small and medium-sized enterprises. Now, one last thing while we're on the economy, and it's related to the housing crisis. The trend of local easing of housing regulations and restrictions continues into Q2. According to a new tally by the state-run financial outlet Securities Daily, at least 138 Chinese cities have unveiled measures intended to prop up the real estate market within this year. This process is only expected to continue as well as sales crash across the country. Between January and April, we remember residential home sales nationwide dropped 32.2% compared to the same period last year. One example of this easing can be seen in Wuhan, provincial capital of Hubei, a city that I'm sure many of you have no doubt heard of. According to Chinese financial outlet Yicai, Wuhan's economic development zone and other districts of the central Chinese city have lifted restrictions on home purchases to stimulate local real estate transactions. According to the Securities Daily, 4 districts in Wuhan have, quote, comprehensively scrapped purchase restrictions, end quote. Okay, let's move on. By the way, guys, don't forget to hit the like button if you're enjoying the video or getting some value from it. And for anyone who wants to go the extra mile and help keep this channel sustainable, my Patreon, or if you just want to give a one-off tip, buy me a coffee, links are in the description below. As always, everyone, thank you so much for all your support. Yesterday, at a press conference in Beijing, the capital, a Bloomberg reporter asked the People's Republic of China Foreign Ministry spokesperson Wang Wenbin the following question. Quote, "The BBC has reported about a huge cache of data that they say was hacked from a police computer server in Xinjiang. The hack yielded what the BBC says are photos of inmates in re-education centers. Are the content that the BBC reported on legitimate content from Chinese police servers?" Mr. Wang, representing the Chinese government, made the following response. Quote, "What you mentioned is the latest example of anti-China forces smearing Xinjiang. It is just the same old trick that they have played before. The lies and rumors they spread cannot deceive the world, nor can they hide the fact that Xinjiang enjoys peace and stability, its economy is thriving, and its people live and work in peace and contentment." End quote. The Xinjiang XINJIANG police files, as they are called, were published yesterday by a Washington-based foundation and shared with a consortium of global media outlets. They can easily be found online. Okay, last up, on the outbreaks and lockdowns front, there are now 4 massive cities that we need to keep our eyes on: Shanghai, Beijing, Tianjin, and Xi'an. Shanghai remains in a state of limbo, seeing small and gradual loosening of restrictions and the promise of opening for millions of residents in early June. Indeed, on Monday, Shanghai authorities reaffirmed June the 1st as the date for officially lifting the city's 2-month-long lockdown, with an aim to restore the commercial and financial hub to normality by the end of that month. As such, we need to maintain a wait-and-see approach until early June before we know whether the timeline will be followed or not. Of course, as large parts of the city remain under lockdown, the economic and supply chain disruptions remain massive. We are also seeing the beginnings of what could be a large-scale exodus of people, Chinese and foreign, from the city. Beijing is a less rosy picture, with restrictions moving the other way, that is, slowly tightening. Vice Premier Sun Chunlan has once again urged authorities in Beijing to take more thorough measures to stop the spread of COVID-19 in the community. Millions of Beijing residents are already experiencing regular mass testing, centralized quarantine, and work-from-home orders, which begs the question, what kind of measures are more thorough? Over the last 24 hours, many residential communities in Chaoyang and Fengtai districts of the capital have seen a form of soft lockdown be implemented. Official cases in the capital still sit at only a few dozen a day. The other 2 cities are Tianjin, a critical port city east of Beijing, and Xi'an, an ancient city at the center of the country famous for the terracotta warriors. We remember that the city went under a strict lockdown last year. Starting today, Wednesday, both of these cities have launched citywide testing to prevent small outbreaks in both cities, but the situation in Tianjin looks particularly concerning. It was also announced this week that from next week, the province of Henan, population 99 million, will be one of the first provinces to roll out long-term testing every 2 days, with rollouts starting in the provincial capital of Zhengzhou. Residents in urban districts must get tested every 48 hours, otherwise they will lose their green health code, which is required to access most places, including one's own residential building in some cases. Local authorities said this week that all urban districts must set up enough testing stations to allow anyone to access one within 15 minutes on foot. This very much appears like this policy is going to be rolled out to more cities and provinces across the country and could well be here to stay.